Ladies and gentlemen, boys and girls, and children of all ages, you are now tuned into the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado. We got a very special episode for you guys and girls today. We're going to be talking about the three companies that are thriving, the three companies and the sector that is thriving during the pandemic. As we know, the pandemic has changed the way that the world invests, and we're going to show you exactly today how that has changed. Excuse my hiccups. But before we get into it, let's not talk about it. Let's just go ahead and get into it. Don't be a stranger. Say hi. Ladies and gentlemen, today we're gonna have a very good episode. We're gonna talk about the three companies that are gonna just to make sure I got my little thing right. We're gonna be talking about the three companies that are thriving, even though there are more companies. I don't want everybody texting me, "Hey, Prince, man, what about this company? This company." We're gonna talk about three companies that are thriving. Why are they thriving? And we're gonna talk about the sector that has snuck up on everybody, especially people like myself, that is also benefiting from the pandemic, and hopefully this changes the way you look at the world of investing and things like that, right? So, ladies and gentlemen, what you guys and girls got to say. Wayne said, "Bro, I finally caught you live. Hey, nice to see you live. Like to catch everybody that's live. Let's catch me live here on Facebook." Veronica says, "Hi, hey, how you doing, Miss Veronica? And a wonderful and wealthy full event, everyone. How you doing?" We got Miss Viva Reed saying good evening. Good evening to everybody. Thank you for tuning in. Glad to see you guys and girls live. Glad that you are here with me tonight. So today's episode, we're going to go over what companies, and if you're catching this live, write down or comment some companies that you think are benefiting from the pandemic and why. So, first of all, ladies and gentlemen, we know the pandemic has changed the way the world of investing has happened, right? I don't even look at the food industry the same anymore. Just last year, I thought, hey, what could be wrong with a restaurant? Good restaurant. Now I look at restaurants totally different. Even though something like this probably would never happen again in my lifetime, it would always be in the back of my head of what if this happened again? I always wanted to buy franchises. I always was interested in food franchises, but this has kind of shaped the way I look at food franchises forever. Now, with this being said, everywhere you look, there's always a bull market. And also, everywhere you look, where somebody demise is somebody else's glory. Where they say someone else's trash is someone else's gold, or however the saying is going. This is telling you, even though you have a time like this where companies are suffering, there's somebody out there that's another company's misery is always another company's joy, pride, and joy, right? Somebody else's pain is somebody else's passion. It always happens that way. So we're going to look at today's episode, what companies are having passion while everybody else is having pain, and we're going to see why they're having passion and pain. And I guarantee you, this episode is going to change the way you look at the world of investing. So the first thing, ladies and gentlemen, we're going to look at number one: companies didn't get stronger. Some companies' competition just decreased. Right? Imagine this. Right now, everybody knows I'm not an NBA basketball player, or I'm not an NFL football player. But if you put me on the field with a bunch of 4 year olds, guess what? I'll become the best football player on the field. So sometimes you don't have to become better. Your competition has to just decrease. The companies I'm going to list, I'm going to tell you how their competition has decreased, but even though their business model stayed the same, the competition just decreased. And by the competition decrease, they got a stronghold on the market. Now, the first thing you got to keep in mind, all of these companies are within the number one, two, or three in the industry. What I mean by that, they're the big dog in the industry. Number one, number two, or number three. And their competition decreased. Y'all ready for the first company? I got the first company up on the screen here for the people who can't see it. Wayne said the companies who make masks Somebody commented and said Zoom, Walmart, Uber Eats due to shutdowns. Nice. I like the way y'all thinking. Number one, Amazon. Amazon e-commerce has dominated during the pandemic. Why? What did they change about their business model? Not a whole lot, but their competition has just decreased. They was already number one. Nobody's going to the mall. Nobody's going to Sears. Everybody know Amazon built themselves online. And guess what everybody's doing during the pandemic? Everybody's online, consuming everything online. People are spending more time at home. People are fumbling through their phones more. People are fumbling through Google more. And guess what happens? That means that Amazon is benefiting from the pandemic. Just because it was already number one, it was already online. It didn't try to get online. Like you got Walmart making a bigger push to come online. All the retail companies are making a big option to come online. Amazon was already there. Plus, Amazon has a very low overhead. They don't have all these stores throughout the country they have to support, like Walmart, right? Amazon, who remembers, Amazon did buy Whole Foods. Amazon owned Whole Foods, so it has groceries, and also it is dominating the e-commerce market, and its competition has decreased. Number one, right? Amazon has dominated the market. When you have a company that you have to tell other people to stop buying, Amazon had to raise his hand and say, hey, look, guys, we're only selling essential items. When you have a business that you can tell other people, I'm only selling essential items, you're dominating. You're a bad boy, right? So Amazon is benefiting, the number one company that is benefiting from everybody else slowdown. Nobody's going to the mall. You can forget about people going not grocery shopping, but the regular everyday browsing for clothes. Everybody's on Amazon, getting the size they want, everything like that. And it was already number one. So number one, we got Amazon. Before I get into number two, let me pop up number two. Then let me get into some of you guys and girls' comments. All right. Let me get back. Okay, where I was at. Veronica said, yes, I have Amazon. Congratulations. How you doing, Miss Jennifer? Miss Melanie, she says, good evening. Good evening to you too, Miss Melanie. Now, the number two company, who is number two? Number two, Google. Google. How has Google benefited from everybody sitting at home? Number one, majority of Uber drivers, some Uber drivers use Uber, but a lot of people use maps to get around, Google Maps. On top of that, by more people spending more time at home, what is the number one website? The number one website. What is the number one research tool? Google, Google, Google. Google has benefited from people spending more time at home, meaning they're going to spend more time on their computers, more time on YouTube. So Google has benefited just from people not having the ability to go out. Guess what? There's no sports. Sports is going away. NBA, NFL, NHL, all the sports are pretty much gone right now. I heard the NBA was talking about coming back, but people have less sports. They pay more attention to the internet. They pay more attention to researching things. That's why you see so much social activity going on, because things spread like wildfire because people don't have the distractions. The club is closed. The bar is closed. The entertainment places are closed. Sporting events are closed. So people are spending more time at home, and they're sitting there front page every day going to Google. Google has benefited from other people's demises throughout this pandemic. More people spending more time at home. More people are spending more time at home. More people are researching things. Google has Google Maps. Google has YouTube. Google has a plethora of things. The cloud, the list just goes on. But Google has benefited because it was already number one in its space, and its competition got weaker. Right? So what you guys and girls got to say? Miss Tisha said, I've been investing in Amazon weekly. Smart lady. Guess what happens at Amazon? I think it's at the end of the month. Amazon earnings. You're going to see Amazon shoot up to the top side. Kiana Wright says, hello, everyone. How you doing? She said, to Google. Yes, Google, right? If you think about it, let me ask you guys and girls, you can ask the question. Netflix. Netflix is another one. But the only thing about Netflix, the space got busy. Miss Reed, I want to say this. When I mean by the space got busy, when Netflix started streaming by itself, everybody was like, oh, it's this new thing. Then when Netflix figured out a great business model and started to do great, here come Disney, here come Nickelodeon and WWE. Everybody got streaming service, so that space kind of got busy. That's why I'm not too sold on Netflix, because so many people are jumping into the streaming services. Even though they are benefiting from this, too much competition is coming in the way. Nobody's really competing with Amazon. Maybe Walmart is trying, but they have a higher overhead. Nobody's competing with Google. That's why I like those two. Keon says yes. Miss Toya says yes. All right. So number one, we said it was Amazon, right? Benefited from other people's demises. Number two, we said was Google. Number three, has taken over the way we do media. Where does everybody get their media from nowadays? Very few people are going home and watching TV and catching the news. Most people are getting their news from Facebook. As we all know, Facebook is on the fire right now because of people boycotting the ads. Why do you think people are boycotting the ads on Facebook? People are boycotting the ads on Facebook because Facebook has gotten so dominant and is so influential that people are attacking it. Notice nobody was talking about, or not really talking about, people was kind of talking about it. Nobody wasn't enforcing Facebook ads until now, because Facebook has gotten stronger during the pandemic. Its voices became bigger. More people are logged on, more people are streaming, more people are tuning in. Facebook, when you look at all of these videos that go viral, they're going viral from Facebook. People get their news. People watch CNN on Facebook. People watch Fox on Facebook. People watch a podcast like you're doing right now live on Facebook more than they do the radio. I don't turn on the radio, but I will watch a Facebook video, or I will tune into YouTube. So Facebook, ladies and gentlemen, has benefited. Facebook has become so powerful. That's why they have the boycotts of the ads. That's why companies are coming out, because they know Facebook can influence the election. They know Facebook can influence the world. Facebook is media. It has overtaken Fox and CNN and all the traditional media outlets. Facebook has become television. People are waking up, and before they yarn, stretch, brush their teeth, or anything, they're checking their Facebook feed. Facebook is dominating, and it has continued to dominate because more people at home. Facebook is faster than television. You can share more information faster with Facebook. So Facebook, when you look at all of this that's going on, all the social injustices and all of the pandemics that's going on, most of it that is spreading via social media. Facebook also owns Instagram. Facebook and Instagram has benefited, and it's become so powerful that everybody wants to attack it. Let me take some of y'all comments before I go into the next one. I got another one for what you call it. Okay. One second. Tisha said my AT&T is looking bad, but I bet you those dividends are looking good. AT&T has the strongest, longest running dividends. I think they are a dividend aristocrat. They might be a dividend king, but yes, AT&T is on the struggle bus. They're not really on the struggle bus. They're struggling a little bit right now when it comes down to stock performance compared to a T-Mobile. So T-Mobile has, built itself up, but Facebook has always been that. I'm not Facebook, but AT&T has always been that flatline kind of stock anyway, consolidating, moving sideways. Never been a big crazy runner, but it always paid a good dividend. Should I sell it? I can't really say. I don't know enough about AT&T to know when to sell it. Because when I sell a company is when a story no longer makes sense. So I don't know what's going on with AT&T, so I can't speak intelligent enough on, hey, this is time to get out of AT&T or whatever the case may be. Walmart is not looking good either. Maybe stock performance wise. I always like to Target a little bit, even though Walmart had better finances. Target always looked a little bit better financially than Walmart. But Walmart, they have been thriving during this time as well. She said good. Amazon, Google, Facebook. And I'm going to give y'all one more. The long haul, if I had to pick one for the long haul, out of Amazon, Google, and Facebook, if I had to pick one for the long haul, Amazon. Amazon be number one, Google will be number two. Facebook is up there too. But the reason why I would say Amazon is e-commerce, is number one, is dominating the space, is benefiting from what's going on. And I think that's about it. That's the only reason why I would pick Amazon as of right now, because this story is making a lot of sense right now. And it also in the food business too. She said, I have all those shares. Here's another one. I'm going to give y'all another good one. I'm going to give y'all one to grow on. One company that I didn't mention, another company that's benefiting from this. Drum roll, please. Uber. Uber. Uber is benefiting from the coronavirus or the pandemic. Why? Not because Uber did anything great. When you look at Uber, who's number 2 up under Uber in ride share? You look at the ride share space. Who's right up under Uber? Okay, everybody wants to call me at one time, but everybody knows that number 2 is Lyft. When you look at Uber, how many ways does Uber make money? Everybody that follows me knows this. 3 ways. It makes money through Uber rides, it makes money through Uber Eats, and it makes money through Uber Freights. Lyft only makes money through rides. The ride business has seen a decline, but guess what? Uber has seen an uptick in Uber Eats. Guess what Uber just did? Uber just brought Postmates. So not only is Uber delivering people, it's also delivering food. It's number 1 over there. Number 1, Uber Eats, if the Postmate deal closes. Number 2 would be DoorDash. Number 3 would be Grubhub. So Uber Eats is dominating 2 spaces, and it has 3 revenue streams versus Lyft only has 1 revenue stream. Lyft only take you from point A to point B, only give you rides. The downside to this is Uber expanding too far. Time will tell. But Uber is very aggressive. It's dominating the space. It has multiple streams of income, and it's just went in and started to dominate the Uber Eats spot. Lyft, there's no Lyft Eats that we know of, right? So honorable mention, Uber is benefiting because its competition is decreasing. Somebody else's pain is always someone else's pleasure, right? Lyft is seeing pain. It's a pleasure for Uber because just because I don't have to do anything better, if my competition goes away, guess what? I start to shine. Now, what sector has excelled from all this going on? You have real estate, you have stocks, you have bonds, you have gold. Which sector has benefited from the pandemic? It's kind of snuck up on people too. Okay. Dre James said he's seen Warren Buffett has spent some money recently. I haven't seen or heard about him spending some money, but I no surprise to me or whatnot. Toya says about DirecTV. Everybody's cutting the cable. Me looking at DirecTV, I don't know the company. I haven't looked into the finances of the company, but the millennials won't even know what a satellite is, right? So I don't even I'm not interested into a DirecTV. From looking at it, when I'm looking to invest into the future, satellite TV, I don't know what DirecTV is up under, but from what I'm looking at it, I don't see that. Veronica says Zuck has the same birthday. Nice. Dre James was going on. Dre James was on. We did the Daniel Artest podcast yesterday. Thank you. Now, she said, okay, got it. Thanks, sir. Veronica says, what are your top 5? We can get into that a little bit later. She said, bring it on. Okay, so we're going to get into that sector. Toya said Uber. Yes, I just brought up Uber. I brought Uber based on your recommendation. Are you happy about that, Veronica? Are you happy about Uber? Ms. Reed said Uber. Yep, Uber has benefited. Uber is dominating the space. Thank y'all for the good comments that's coming in. Food and ride. They have food. They got rides. They also have freights for Uber. And they have Uber Eats. Yep, everybody's paying attention. A recommendation a month ago on Uber. Are you happy about that, Veronica, about Uber? Tisha said you got a good point. Yes. See, I look at companies, Tisha, when I look at a company, I only invest into the top 1 or 2, or you got to be in the top 3 of your space, right? Some people come to me and say, Prince, what do you think about this new company? Can it take over the space? To me, I tell everybody, I think Uber, maybe I'm wrong or right, but to me, when I look at it, Uber looks like Facebook 5 years ago, more like 6. They look like Facebook about 5 or 6 years ago. That's how Uber looks to me today. It's new. They're unprofitable. We don't know if they're going to figure it out. But I can't see the world without social media now. And I can't see the world without rides. My son is 9 years old. He's not going to know what a yellow cab is. Your kids are not, or your niece or your nephew or grandkids are not going to know what a yellow cab is. They're going to pick up their phone when they want to ride or when they want food or whatever. They're going to do this. Long gone are the days of ordering a pizza from a pizza parlor, right? You got it right, ladies and gentlemen. The sector that has benefited from this the most has been gold. Gold. Gold goes up in a time of uncertainty. Right now, ladies and gentlemen, we have a lot of uncertainty going on. People don't know what's going to happen this month. I really thought by June or July this coronavirus thing would be gone away, but now it is lingering for the whole year. Now that it's lingering for the whole year, airlines, there are going to be some companies going bankrupt. Come October 1st, companies will be laying off, airline companies will start to lay off people. If you pay attention, according to the bailout, all the companies, all the airlines that took bailouts, they cannot lay off employees until September 30th because they thought we'll probably be out of this. Here comes, now it's not looking too promising. Come September 30th, October 1st, they're going to probably start laying off people in the airline sector because it doesn't seem like airlines are going to be taking off anytime soon. So if you got airline stocks, I have Southwest Airlines. I got some holding off to do before we have some taking off to do. But that's why I always go with the top company. And I won't be surprised if one or two airlines go broke. And the one or two airlines that will probably go broke is probably going to be Spirit and it's probably going to be Hawaiian. Those are the two I got on on my list of the ones I expect to probably run into bankruptcy, right? Forming some type of Chapter 11 bankruptcy. The number one in the space is Delta, Southwest Airlines. That's why I only mess with the top companies in the space. The reason why is when things get rough, the little guys go first. The little guy at the companies at the bottom go first. We all know if you work at a big company, if you're in the military, anybody that has a CEO all the way down to the bottom person, you know when things get bad, what they say, crap rolls downhill. So the companies at the bottom, those little small airline companies, those are going to be the ones that are going to end up going bankruptcy, filing some form of bankruptcy, right? When you have uncertainty, right now, people don't know what's going on in the fall. There's no basketball. There's no football. We don't know when things are going to open back up. We don't know what's going on. Investors run to gold. That's why gold is the sector that has benefited from the pandemic because it has created an uncertainty in the market. I was in gold for a while, wasn't really doing much, but gold has kind of snuck up behind me or whatever. So that's good. That's that's a good thing. So now we keep an eyeball back on it, like, okay, let's see how gold is going to really run this year, right? You're right when you said gold. Ms. Tisha said, I just invested into the S&P 500 index. Yes, the best one out there. Ms. Tisha, which one do you use the most? I like SWPPX. I want to let you know all S&P 500 ETFs are not created the same. It's great. You don't have a transaction fee because, transaction fee is pretty much non-existent nowadays. But you got to pay attention to the expense ratio. What is the expense ratio on your S&P 500 ETF? Also, how much does it cost? VU is over $300. SPY is over $300, right? But I know one for like 40 to 45 bucks, whatever, right? And that's Sierra Whiskey Papa X-Ray. That's SWPPX. But for me, if I'm investing over 10 years, I like to choose QQQ. I like to choose the NASDAQ because that's more of technology companies, and those are companies who's going to be more aggressive. So the aggressive technology companies are going to be the NASDAQ. All right. Wayne, you got it right when you said gold. Look at somebody. Someone already said the NASDAQ. Good job. Good job. I'm going through some of the comments here. I'm getting down to them. How about Apple? Apple is another amazing one. I'll tell you, the only thing about Apple has stores. And they've been closing some of their stores, opening back up some of their stores. So their stores being closed, that means profits are probably going to decrease. We don't know when those stores are going to open back up. Since the COVID-19 is still lingering around, that's the only thing. They have stores. Amazon really don't have stores. Apple has a lot of stores, but they're a great company. And Microsoft is another one. I only picked three. But that's my look on Apple. And the Dow Jones Industrial, I see something good here. The Nasdaq is the one I choose more over the Dow Jones and the Dow Jones and the S&P 500, because if I'm more than 10 years, I want to be a little bit more aggressive and I want more growth. And the index that has the most growth and the most technology based companies are the Nasdaq. And you look at it, look at the companies, look at all three of them. The ones that perform the best this year is the Nasdaq. Tisha said, "Ain't nobody paying for satellite TV." She said, "Ain't nobody paying for satellite TV." You're right. You know me. I don't know. I think I pulled a cord on cable probably about 10 years ago, and the only thing I really was missing about cable, maybe a sporting event. And if it was a sporting event that I really wanted to watch, I would just go to a local sports bar and watch it and go home. Right? I don't. Cable for me. I mean, Netflix is enough. Hulu is enough. Social media is enough for me to entertain me enough. So, buying cable TV, satellite TV, that's out of the question for me. I'm right there with you, Tish. Um, Veronica said yes. I'm thinking she's talking about the Uber that I was talking about. Uber not a year ago, about a month ago. One of my risky, unprofitable pick stocks. Yes, Yes, somebody said technology. Technology. That is correct. That's your Nasdaq. All right, we got a question. So I get a good balance with the Dow Jones ETF, buying shares in individual companies. What else do you recommend? She said, so I see a good balance with the Dow Jones ETF and buying shares in individual companies. What else do you recommend? I don't look at buying stocks. Tisha, this is what you got to do. All right, go ahead and break it down. I'm kind of getting off a little bit, but she asked the question. I'm going to tell you. You got to figure out, what is your goal? What is your number? What number do you need to get to retire? I don't know how old you are. I don't know how old you plan on being when you retire. I don't know how much money you want to make in retirement. But those are very crucial things. Take me, I'm 35 years old. I may want to work until I'm 55. Let's say I want to work for another 20 years. And in that 20 years, I want to earn $50,000 for the rest of my life, right? If I know that and I plan on living to 85 years old, I know I have 20 years to reach a number. And then also, once I reach that number in 20 years, I have to live off of it for 35 years. If my math is correct, I have to live off that money for 35 years. They have to withdraw me. I have to make $50,000 a year after taxes. What is that number for me? What is that number for you, Tisha? You can figure that number out. You sit with a financial planner, or there's all type of calculators online, and that number may be $500,000. It may be $700,000. It may be $200,000. Whatever that number is. Now, let's say hypothetically, you need $500,000 in 20 years. Now, you can reverse engineer and tell yourself, okay, I need to invest. If I invested $1,000 a month for 20 years and earned 8%, I can reach my retirement number. So instead of buying, and now when you know what you need, you need 7%. Now you can build your portfolio around what you need. Instead of just buying and just hoping it goes up, buying and hoping it goes up, build a game plan. Figure out, what is your number. I want to retire in 5 years, 10 years, 20 years. And in order to retire, I need about $60,000 in retirement. I have a job that's paying me this. I have a pension plan that's paying me this. Or I have nothing. And I want to get to this number by this time. Once you know your number, you can build a portfolio, whether that's real estate, stocks, or business. You can build it around what you need. Some people already know. I know I need $700,000. So if you ever hit the lottery or you built your money up, this is exactly what you need in order to live until your goal. So right now, when you're just buying stuff and just investing, which is great, build a goal, because you may realize you don't need to take that much risk, or you may need to realize you need to take more risk in order to meet your goal. All right. Hopefully that helps you. She said Delta will fly. Southwest Airlines will fly too. I definitely believe that. Good evening, everyone. How you doing? Hold your apple. Definitely hold your apples. Don't give them to your school teacher. What about a gold index fund? I'm going to do a video on that. IAU. Antonio, what's going on, my man? IAU. That's India Alpha Unicorn. India Alpha Unicorn. IAU. Right now it's $17. And that's pretty much tracks gold. Or you can do GLD. GLD, Golf Lima Delta. As uncertainty builds, some people buy call options on gold, right? You're right there with me, Veronica. I have Apple and Microsoft. I know they're technology companies. I know they're right there together, but they're like, two things that you like, but you just can't give up one, so you just get both of them, right? Somebody said, great content, King. Thank you. Veronica said, do you think Amazon is going to max out soon? It's all about the growth. We're going to see their earnings. If their earnings shows they're becoming, and that's what the stock market trades off of, what's in the future. If your earnings are tied into you growing, you're going to continue to grow. Right now, at this time right now, when it comes down to e-commerce, I don't see it stopping, especially with the pandemic going on. They're benefiting. All of the Sears and look at their competition. Their competition is struggling right now because nobody is going to the store anymore. Everybody's going directly to Amazon. Great information. Thank you for the free insight. No problem, Toya. Delta, and I think she tried to say Southwest Airlines, right? Yes, Southwest Airlines, Delta, those are the top two companies. IAU, GLD, those are the gold sectors. That's how the gold is going up, because uncertainty has hit the market. Anytime there's uncertainty of what's going on, people slide over the gold, which is very scary for people who own stocks, because if you see big money sliding over the gold, that means they don't trust the current stock market. So gold goes up in a time of uncertainty, but in a time of when things are doing well, gold prices go down. Gold had its peak back in 2008 in the financial crisis, but this year the market failed and rebounded so fast, gold didn't even have a chance to really react. So now it's slowly becoming popular again. So, ladies and gentlemen, let's go over the show today. What we did, we talked about the top three companies that are benefiting. Top three companies that are benefiting because of the pandemic. Competition is decreasing around you. Look at Uber. Uber has gone into different revenue streams. Uber's CEO is betting to be profitable by 2021. He was supposed to be profitable by this year, but he came out and said because of COVID-19, we'll be profitable by next year. They brought Postmates. They tried to buy Grubhub. So very aggressive, and they have three sources of income. They have freights, they have rides, and they have Uber Eats. They got three ways to make money versus Lyft only has one way. Grubhub only has one way. Uber got 2, 3, 4 ways, and they're number one in both space. They're number one in the food space. Now Uber is getting into groceries. Uber wants to deliver everything, and they got big backing. So I'm watching Uber as long as it makes sense. The number one company that benefited was Amazon. Everybody stopped going home. I mean, everybody stopped going out and shopping for clothes and things like that. More people are staying at home. Amazon, their competition decreases. They're benefiting from everybody staying home and shopping even more. Number three, and then plus people are making more money in unemployment. Number three, Google. Google benefited big time in this space, because if you're big on YouTube, you're big on Google. Everybody knows Google is the number one website, and it runs the internet, right? So if you're a company, companies are spending more ads on Google because they know more people at home. The next one, Facebook. Facebook, even though it became so big that it hurt itself, because now people want to go after it. Why do they want to go after it? Because they're too big. They're too powerful. Number 5, the uncertainty. Uncertainty in the market has led to this sector, gold, taking a run and taking the lead for 2020 as uncertainty happens in the marketplace. Ladies and gentlemen, that concludes my show. My name is Prince Dykes. This is the Investor Show. Until the next video, podcast, cartoon, or whatever else crazy you see me do around the globe. Peace. Be safe. I'm out. And thank you.